When the markets get shaky, where do smart investors hide? So far in 2025, mid-cap and small-cap stocks have taken a serious beating. The Nifty mid-cap 150 is down over 9%. Small caps, they have dropped more than 14%. And yet, large caps, the largest companies of the country, have managed to hold their ground. The Nifty 100 is down just 2.1%. Nippon India Large Cap Fund, the fourth largest fund in the category with 37,546 crore in AUM, has managed to fall only 2.92%. Not great as compared to the benchmark index, but relatively better. In fact, over the last 1 year, while Nifty 100, an index that represents the largest 100 companies of our country, delivered a modest 0.68%, Nippon managed to squeeze out a 1.6% gain. Hello and welcome to our channel 5 Minute Finance by ET Money, where we discuss the basics of investing and personal finance. In this video, we'll break down what Nippon Large Cap Fund is doing differently. Is it playing safe, going bold, or just riding the wave? So do watch this video till the end, as by end you will be able to judge whether this fund is good for you or should you avoid it. Let's start with its performance. Despite all the market volatility, Nippon India Large Cap Fund managed to stay in the green over the past 1 year, delivering 1.6%, which is ahead of the Nifty 100 0.68%, but slightly behind the category average of 1.83%. Over 5 years and 10 years, the fund has delivered 27% and 13.46% CAGR respectively. That's not just strong, it's well ahead of both the category and index averages. But trailing returns can sometimes mislead, as they measure returns from one point of the time to other point of the time. They don't tell you anything about whether the fund's performance was consistent or not, and that's where rolling returns come into the picture. Rolling returns give you a better sense of consistency by showing how a fund performs across all market phases over a long time period and not just one point in time. And if you want to understand rolling returns in detail, you may watch our other video. The link is in the description. So Nippon India Large Cap Fund has given an average 15.43% rolling returns in a 7-year period over the last 10 years, beating both category average 13.56% and Nifty 100 13.91%. This means it hasn't just had good phases, but it has delivered steadily over time. That kind of consistency usually points to solid stock picking and a well-run portfolio. What's behind this solid track record? A big part of the credit goes to Sailesh Rajbhan, the fund's long-time manager. He has been managing the scheme since the fund's inception in 2007. So what's his strategy? Let's now zoom in to understand the fund's winning investment strategy. By SEBI rules, large cap funds must invest at least 65% in large cap stocks. Large cap stocks are the top 100 stocks in terms of their market capitalization. Market capitalization in simple terms means the size of the company. The rest can go into mid caps, small caps, or even large caps, or even debt based on the fund manager's call. Now look at your screens. As you can see, over the last 5 years, Nippon India Large Cap Fund has broadly stayed in line with its peers in large cap allocation. But here's what sets it apart. Compared to the category average, it consistently allocates a little more to mid caps, around 10 to 12% versus the typical 6 to 7% for the category on an average. That extra exposure can bring more upside when markets are rising, but it may also add risk during corrections. Now let's look how the fund's top holdings have evolved. First off, the fund has increased diversification. It held 41 stocks in March 2021. As of today, it holds up to 72 holdings, spreading risk more effectively. Despite this, it still has a concentrated top. HDFC Bank 9.03% and ICICI Bank 6.11% lead the pack. But the fund doesn't sit still. It actively churns its portfolio, cutting some names, adding new ones, and rebalancing weights. Recent entrants like Vedanta, Dr. Reddy's Laboratories, Avenue Supermarts show new bets, while stocks like ITC and Bharti Airtel have seen reduced exposure. There's also a push towards emerging themes, with newer names like Swiggy and NTPC Green Energy making it to the list. So clearly, The fund manager isn't afraid to take calls, whether it's adding cyclicals or playing green energy themes. Now comes the big question. How does this fund behave when markets go south? Well, the picture here is mixed. The fund has seen varied performance during market downturns. Look at your screens. Nifty 100 was in red in 12 quarters in the last 10 years. In 8 out of those 12 quarters, Nippon India Large Cap Fund actually fell more than the index. For instance, in March 2020, while Nifty 100 fell 28.6%, this fund dropped a sharper 32%. But there were some bright spots as well. In quarters like March 2023 and December 2024, the fund managed to limit losses better than the benchmark. So we can say that this fund does not play safe during corrections. It's more tuned to chasing growth than managing risk. So on your screen is how a 10,000 rupees monthly SIP in this fund has performed over the last 10 years. Your total investments of 12 lakh would have grown to 27.34 lakh, delivering an impressive XIRR of 16.96%. For comparison, the same SIP in large cap index Nifty 100 would have grown to a lower sum of about 23.32 lakh with a lower XIRR of 14.03%. This clearly shows that the fund has significantly outperformed its benchmark in wealth creation. So while this fund has delivered impressive performance over the long term in past, it could not contain the downside in falling markets much. And it's a wrap. Don't treat it as a recommendation. The whole idea of this video was to give you enough information to know Nippon India Large Cap Fund better and to decide for yourself if this fund is suitable for you or not. Drop in any questions in the comment section. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.